Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Delivery wars heating up, Uber's lawsuit against Doordash, a lawsuit against Uber, an expansion into Turkey, Dara Khosrowshahi on the Uber rides and orders that just keep coming.
We don't see any consumer slowdown at this point. We don't see consumers trading down to more affordable restaurants or pulling back from any of our services.
And the U.S. and China meet this weekend in Switzerland. Lazard CEO Peter Orszag says this is the beginning of a high-stakes road.
But we need to get to framework agreements with the most important trading partners in this 90-day window.
We're not going to get that with China.
Plus, an escalation between India and Pakistan, a change at the FDA that's prompted a change in drug stocks, and a name change right here at home.
We're conversant.
Yes.
Yeah, very conversant.
All of that today and much more. It's Wednesday, May 7th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin.
China's central bank and financial regulators announcing sweeping measures to ease policy that includes cutting key interest rates to 10 basis points and reducing the amount of cash that banks must hold by its reserves by 50 basis points. Now, the central bank saying that the cutting of the reserve requirement ratio effectively injects an additional liquidity of about $138 billion into the market. It also announced some broad measures to try to support financing for key sectors. That includes technology, real estate, lending for autos, and a couple of other items. And so I think it's that plus what you're about to talk about.
Yeah, trade wars aren't good. That's why they're called wars, because there's casualties on both sides. But we're definitely seeing some strain, maybe here as well. I mean, we had a negative print on GDP, but I guarantee you China is feeling it. They may have, considering how much they export versus how much we send to them, they've got a lot more to lose. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer are going to meet with China's lead economic representatives in Switzerland this weekend. Megan Cassella joins us now with more. Good morning.
Hey, Joe. Good morning. So the possibility here for a real step forward between the U.S. and China with this meeting. It's set for Saturday and Sunday in Switzerland. And this is really the first confirmed meeting between high-level officials on both sides since the tariffs were announced. And it's the first real sign in months of momentum in U.S.-China trade negotiations. The news of it yesterday came just after Bessent told lawmakers earlier in the day that trade talks with China had yet to begin. And Bessent last night appeared to sort of downplay expectations for this meeting, but he did say everything is on the table.
What we're going to do in Switzerland is we've agreed to talk. Then on Saturday and Sunday, we will agree what we're going to talk about. My sense is that this will be about de-escalation, not about the big trade deal. But we've got to de-escalate before we can move forward.
Now, one tangible outcome to watch for here will be whether the two sides agree to bring tariffs down from where they are now at 145% and 125%. Bessent told me about 2 weeks ago he believes that's the necessary step before broader talks can begin. And the president has been resistant to this, but China has also called for that, for lowering tariffs as a way for the U.S. to show sincerity. Now, overnight, China's Commerce Ministry also laid out a longer set of stipulations. They say if the U.S. wants to negotiate, it must face up to the serious negative impact of unilateral tariffs on itself and the world, correct its wrong practices, and meet China halfway. Guys?
Fingers crossed. I guess we could conjecture and give our own opinions on what the likelihood, but I think, Megan, it might be best just to wait and see what happmes at this point.
The only thing I'd
we'll wait
add
and
to
see.
that,
We'll know soon.
Yeah.
some of those comments coming from the Chinese government.
Right.
Also adding to that they said that the rest of the world shouldn't appease the United States when it comes to these things, too. Maybe signaling that they're worried about the rest of the world kind of going along with some measures and teaming up with the United States against them. This is going to be kind of fascinating.
Absolutely. I think China is seeing how many countries are going to the U.S., are responding to these tariffs by saying we do want to make a deal and offering different things. And China doesn't want to be the one left alone as much as they want to hold out. We've seen that over the last couple of months. You guys have talked already earlier about some of the easing that they're doing. It does become a question of what the pain threshold is in China versus in the U.S. if we started to see some economic impact show up in the data here. So China wants to hold out, but as they're seeing every other country in the world, as the administration puts it, come to Washington to try to negotiate, they have at least agreed to this meeting, even as they keep putting out these strong words about what they will or won't do once they get there. Yeah,
and Scott Bessent chooses his words very carefully. We've seen that, and I think he's earned some credibility and respect on both sides. No matter how you feel about Trump or the administration, most people, I think he's got really high. He's not underwater in terms of polls and things like that. And it's, I think, for a reason. And you can see, I don't know him that well, but his mind seems to be working on exactly how he chooses words very carefully. And I think when he says things, it's not going to be. And as a Treasury Secretary, you don't want to misspeak as a Treasury Secretary because so much is at stake.
That's right.
I think all the time.
Major implications for everything he says. And I'll say, too, that everyone I talk to behind the scenes says they don't want to come out with it, but that Bessent's the one that they don't want to say it publicly, but Bessent's the one that they're going to try to get into the president's thinking or ask for an exemption or try to have cooler heads prevail on a lot of this. Bessent is really the one leading the way. The other thing that's interesting on China, and I want to mention, as you said, Joe, how much more they have to lose than we do. One thing we've heard from the president in the last couple of days when he speaks about Beijing is when he thinks about the trade deficit, he says that if we cut off all trade with China, that's only a good thing for the U.S. because it means that we no longer have a trade deficit. We're no longer losing money. It's not what most economists think. It's not what I think the market believes either. But something interesting to watch as we get closer to this meeting.
Although even individuals that, in past discussions about trade deficits, no one really loves trade deficits either. I mean, Buffett, we acknowledge that we're big consumers and we're a wealthy country and the world is, we've all gotten wealthy together, but it just keeps hitting new highs, the trade deficit. And, I don't think you should judge everything you do with trade on whether there's certainly circumstances that warrant a deficit with another country, but it's not something you wouldn't like to say, wow, we tripled our trade deficit. Yeah, we're really, that's not right. That makes no sense. Megan, thank you.
Drug stocks in focus today after the FDA named oncologist Dr. Vinay Prasad as the director of its Center for Biologics Evaluation and Research. That's the government entity that oversees regulations of biological drugs, including vaccines, also in charge of gene therapies and the safety of the U.S. blood supplies. This is normally a position that has been held not by somebody who's seen as being political, but a long-time career scientist within the FDA. Prasad has, though, been a very vocal critic of pharmaceutical industry and FDA leadership, and he blasted the agency's decision to approve COVID vaccine shots for children. The news of his appointment did send stocks lower yesterday across the pharmaceutical spread. Particularly hard-hit name, one of those particularly hard-hit names was Sarepta Therapeutics. That makes a gene therapy treatment for Duchenne muscular dystrophy that could get much more scrutiny. You can see Sarepta shares down by more than 26%. If you were looking at a larger basket of biotech shares, they were down by 6% yesterday. FDA Commissioner Dr. Marty Makary said that Prasad would bring scientific rigor, independence, and transparency to its role. If you look at some of the things he said recently, he said he likened Marx, the guy whose job he's taken, Dr. Peter Marx, to a bobblehead doll that just stamps approval, probably raising some of the concerns you see among drug companies that were hoping for faster approval on some of these things. He's got a long history of very publicly criticizing the FDA in its current form, too.
See where Moderna was?
Dead, yeah.
24?
Yeah, 24.90.
Guesses on the high?
More than 400.
464.
Yeah.
Some other news. Not roiling markets yet, but maybe should be. I don't know. India attacking sites in Pakistan that it said were part of a terrorist infrastructure following an attack by Islamist militants on Hindu tourists last month that killed 26 people in Indian Kashmir. For its part, Pakistan saying it had shot down 5 Indian fighter jets in amounts to the worst fighting between the nuclear-armed countries in more than 2 decades. Pakistan saying at least 26 people were killed, 46 injured in the India strikes. Pakistan now denying it has any connection to last month's attack on tourists. The iShares of MSCI India's ETF falling earlier, though it has recovered. And I will say, when I was out at Milken on Sunday night, the sort of prospect of war between Pakistan and India was a big topic of conversation, like a big one.
Yeah, big
and
time.
we don't really talk about that that often.
It's been going on for decades.
Yeah, we just said 20 years. I've heard other people say that this is the most in almost 6 decades, more than half a century, in terms of how tense things are between the two nations.
But that was sort of not a black swan risk, but more like a risk that everyone was saying is right in front of us that nobody's
Before
talking
it
about,
happened,
and the market's not engaged in.
Some details on dissension at Uber, stemming from changes the company recently made to a popular benefit and its in-office work requirements. Last week, CNBC reported that Uber had told employees, including some previously approved for remote work, that they'd have to start coming into the office 3 days a week. Also, that they would be eligible for a month-long paid sabbatical after 8 years instead of just 5. That led to a heated all-hands-on-deck meeting during which CEO Dara Khosrowshahi defended the policy changes to employees and told them it is what it is. And this is all according to audio and other correspondence obtained by CNBC. We'll get more on this when we speak with Dara Khosrowshahi following the release of Uber's first quarter results.
And NBC Universal's parent company, Comcast, revealing the name of its spinoff of the majority of its cable network portfolio. The new company is going to be known as Versant. CEO Mark Lazarus told CNBC in an interview that the name was chosen to emphasize versatility and the company's familiarity with multiple subjects. He said the name will be used for the business-to-business purposes rather than being something that is consumer-facing. He made a big point about how these brands are incredibly important that already exist. Exactly. Lazarus says that he wants Versant to be seen as a house of brands with each one interacting with its users. Our network, for example, CNBC, is one of those cable properties that Comcast is spinning off into Versant, and obviously CNBC is a well-known brand. That's what we would like to see out there, too. In addition, Versant will own MSNBC, USA, Oxygen, E!, Sci-Fi, and Golf Channel. It's also going to be housing digital assets Fandango, Rotten Tomatoes, Golf Now, Golf Pass, and Sports Engine. Lazarus confirming that Versant is on track to be spun out from Comcast before the end of 2025. And if you look it up, it's nice to know that Versant means experienced, which is what we are.
And we're conversant.
Yes.
Yeah.
Very conversant.
Slope of a mountain. It
Yep.
also.
My
What
dad
I
likes
like
that
is the animation of that. See the little V thing
where
there?
the shadows
it starts
come
as a
out?
line.
Yeah, the shadow lines.
Starts as a line like this, and then they move across like that, and one goes to the A and one
goes to the V.
One goes to the V.
Yeah.
I like. But the individual brands are what matters. So the Squawk Box brand is what I'm hanging my hat on.
Yeah.
I know you are.
How did you know that? But for a while, I think we've known that a corporate umbrella name is just for.
Well,
what is that even for?
I bet we get a CNBC.com email address.
But it's not for branding
for
of
the
the
investor class.
Right,
right.
But it's not for branding of the individual. We're going to continue to brand CNBC.
Exactly.
Now, and there is a question about what our email address will be. I'm hoping it's CNBC.com, right?
Well, why don't you tell everybody your email address and then
I am.
Right.
Can I keep my driver?
You got to work out. You got to work that out.
Can I have you work it out for me?
Call Ari.
I've seen your skills. I've seen your negotiating skills.
Cheese will be next.
Coming up next on Squawk Pod, what's driving Uber's business with the company's CEO, Dara Khosrowshahi.
We'll have our good days and bad days, but hopefully the good days will outnumber the bad days.
And what makes a bad rating?
4 or 5 is not acceptable.
No, I'm not 4 or 5.
It depends. It depends.
This is Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin, along with Joe Kernen and Becky Quick. Uber reporting better than expected earnings, but revenue fell short. Shares right now, take a look. You're looking at 82.50 on the stock, down about 3-4%. Joining us right now, first on CNBC, is Dara Khosrowshahi. He's Uber's CEO. Dara, it's great to see you this morning. Look, it looked like a beat across the board, actually a big beat. Stock not reacting maybe the way you'd want it to, but maybe expectations were marginally too high. I don't know how you think about that.
Yeah, it's tough to track daily stock price changes, Andrew, but I think the results were spectacular. Our transaction growth, over 3 billion trips served, both on rides and eats, was consistent with last quarter at 18%. Gross bookings growth came in very, very healthy as well, similar number. And then adjusted EBITDA was up 35% on a year-on-year basis, over $2 billion in cash flow. So the company continues to execute well. And, you know, the stock price has performed really well this year in a tough market. And, you know, we'll have our good days and bad days, but hopefully the good days will outnumber the bad days. We're very happy with the results and the momentum of the company.
I was going to say the margins on the mobility business, meaning those folks who are getting in the cars, is, you know, a standout. How much pricing pressure, if you will, or opportunity power do you really have?
You know, pricing has been an area, you know, we want to keep rides business as affordable as possible. And if you look at the growth rate between kind of last quarter and this quarter, our gross bookings growth rate on mobility slowed down because we didn't take price. So last quarter, for example, price increased by 4%. This year, pricing was essentially flat. And that's really for two reasons. One is we saw the insurance costs. Insurance has been a huge factor in terms of inflation, not just in transportation, but also home insurance, as you know. We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the U.S. slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to our consumers.
What do you see in terms of the mix between the mobility businesses, the ride business effectively, and the eats business at this point? So if we were to look today at a pie chart in terms of what the business looks like, mobility versus eats today, and you sort of look a couple years out, what do you think that looks like?
Well, listen, it's like a Ferrari racing a Lamborghini. They're both going incredibly quickly. Mobility grew 19% on a year-on-year basis. Delivery delivered a second growth rate of 18%. The two are, you know, pretty close to the same size. Mobility is a little bit bigger in terms of gross bookings, but our mobility and delivery businesses are hitting on all cylinders. I think it's going to be a great race, and I can't predict the outcome.
There does seem to be, though, a bit of a war going on in both the delivery and mobility wars. Lyft announcing it's going to go international, so this has become an international war, if you will. Doordash yesterday saying they're buying Deliveroo, so there's a whole sort of host of things going on. You're buying a business in Turkey. How do you see that all playing out?
Well, we see these spaces, both the mobility and delivery spaces, they're $1 trillion plus markets. Competition is natural. For us, we've been in an enviable position in that we built most of our global footprint organically. We built these businesses, over the past 15 years, brick by brick, trip by trip, so to speak. And we've always said that the platform advantage that we have, both being in mobility and delivery, and our global scope, really having exposure to all of these different economies, has been an advantage. Now that you see our competitors have to buy their way into the international markets, it shows you that our strategy is working. I'd much rather go organically. Turkey, for us, was one of the largest unaddressed markets in terms of delivery. Trendyol Go is a terrific business. They've got a great team, great tech team. And we just couldn't resist going into Turkey. We've had a lot of success there in terms of mobility, and we hope to duplicate that with acquisition and delivery.
Mentioning Doordash, you are suing that company, claiming that they are involved in coercive tactics, quote, to reduce restaurant consumer and consumer choice. Where does that stand, and why did you feel like you had to go to court?
Well, we wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, et cetera. It's delivery as a service. We think that should be an open market. And right now, we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give our merchants more choice.
Talking about anti-competitive moves, the FTC, you faced a lawsuit from them, which says that you're charging consumers or have been charging consumers without their consent for a service called Uber One. I don't know if I still am signed up for Uber One. I might be, Dara. I'm not sure. And maybe that's the problem. I don't know. But where does that stand? And do you think there's an opportunity to settle that case?
Well, it's a bit of a head scratcher for us, Andrew. Uber One has been incredibly popular. We've got over 30 million subscribers now to Uber One. 60% of our gross bookings come in our Uber Eats business come from Uber One members, and that continues to grow. The suit alleges that, some people don't realize if they're signing up or cancellations are difficult, but I'd encourage you to go experience it yourself. It's very, very simple. You take a couple of steps to be able to cancel if you want. And the good news for us is Uber One growth indicates that consumers are seeing the reward in this program and the savings, and our Uber One business continues to grow at very, very high rates.
What are you seeing in terms of the consumer, the strength of the consumer? Obviously, there's been lots of concern and worries given all of the tariff conversations and everything else going around the country. We haven't really seen it in the economic numbers. Has it shown up in yours, or are you seeing anything sort of moving forward?
We watch the same news you do, Andrew. And the fact is, as evidenced by our results, we don't see any consumer slowdown at this point. Our audience growth up 14% is very consistent with what it was last quarter. Frequency is now at 6 trips per month, continues to be at highs, and our frequency continues to increase year on year. We don't see consumers trading down, to more affordable restaurants or pulling back from any of our services. So we haven't yet seen any signs of consumer weakness. I'd say the only kind of shift that we've seen in spend is a bit more travel spend internationally than in the US, but otherwise the consumer remains strong. And we're in a couple of categories, food and transportation, that tend to be quite recession resistant anyway. So far so good, but we're watching the consumer very, very closely.
Talking about the consumer, what about rides in and out of Newark, given all of the commotion that's happening in the air, or maybe lack of commotion because there's not enough planes coming in and out of there?
Yeah, it's really unfortunate what's happening, and it is showing in the volume. So if you look at New York airport volumes, they're trailing that of what we see nationally, and that's reflective of what's happening in Newark. It's unfortunate. Hopefully they can get that resolved as quickly as possible.
That's over the last week? Dara, week and a half since that started? Wow.
It's really in the last couple of days. New York airports generally are weaker than airports around the nation. And, this is what Uber is all about. We are an everyday use case, so we have a pretty incredible pulse on what's happening in every single local city.
Hey, Dara, Andrew was trying to figure out what I should use for Uber if I lose my driver. I'm told is there a seniors new program or something at Uber?
There's an ability for you to simplify your app, and also, if you want Andrew to call an Uber for you, he can call that for you, and he can track you, and really take care of you.
Don't take me into like some. So he could track me then. Will you?
Andrew, I think you should be calling Joe's Ubers.
I'm going to be calling I'm going to put him within. It's going to be like we're going to set up a trust.
Well, we were trying to figure out which one to use. Uber.
I'll be operating the trust for you.
I think I can get a discount. Can I get a discount or something if I ever? It's for
an additional service, Joe. It's making sure that you're safe and sound wherever you go.
Hold on. There's no discount. There's no senior discount.
Over 55 is where I'll be there soon.
Okay, but most importantly, what I'm going to get you, Joe, eventually. Yeah. Is an autonomous vehicle. That's going to drive you.
We're getting one for my son. We are. I'm doing that, Dara.
So, Dara, my question to you is: I know you're launching with Waymo in Austin. You got Elon Musk supposedly launching. I don't want to say supposedly. He says he's launching in 2 or 3 months from now. His service. How do you see that competition playing out?
Yeah, we're already launched in Austin, Andrew. You can experience Waymo and Uber yourself. We've got almost 100 cars in Austin, and the launch has been absolutely incredible. Consumers are opting in; they love the product. Waymo's safety record is second to none, and the Waymos are really busy. The average Waymo in Austin is busier than 99% of our drivers in Austin as well. So the service is working live. This is a huge market, $1 trillion plus market. More autonomous vehicles means safer streets. We'll be watching kind of the pilot from Tesla as well. It looks like it's going to be a limited launch, but this is not going to be a winner-take-all market. And I think more autonomous investments coming into the industry is only good for everybody. And hopefully it'll make for safer streets and consumer delight as we're seeing today in Austin. It's pretty awesome.
So who else, though, besides Waymo? I mean, is Tesla to you the next big competitor at this point?
Well, I think we work with Waymo, obviously, and there are many other players out there, but Tesla's certainly going to be a competitor. We're, for example, working with Volkswagen to bring their ID Buzz wagons to Los Angeles. We're working with May Mobility in Texas. We ride in many, many international markets along with Pony and Momenta. There's a lot of investment in many competitors in this marketplace because it's going to be an enormous marketplace, and the vast majority of those competitors are partnering up with Uber to commercialize the service safely.
Okay, and then separately, let's just talk about what's going on inside of Uber in terms of the culture and employees. You've changed the sort of benefit mix, trying to get people back in the office. What's happening here?
Yeah, listen, we want more people in the office. We provide a really flexible kind of work experience where we want you in the office Tuesday, Wednesday, Thursday. Those are anchor days. So when you're in the office, everybody else is in the office. You can work together. You can get to see your compatriots in arms, so to speak. Monday, Friday, you can come to the office or work from home. We think it's a great policy, and it's the right mix of giving our employees flexibility, but also getting them to the office for those all-important teamwork tasks.
I didn't know that prior, at least in prior years, you had offered a sabbatical program as a benefit. You had to be at the company for 5 years. You've moved that to 8.
Yes,
Why?
and we think that's incredibly generous as it is. Listen, we want people, again, in the office. We want them working hard. Our company is executing really well, but we need to be at the top of our game, and that means people working together in the office.
Okay, but what about the folks who basically took the job with the understanding that they were going to be remote, and that was sort of cool with the program, and now it's shifting on them?
Yeah, I think that's tough, and we're talking with those people one-to-one, making sure that we make accommodations as can be. But that is different for people. That's a different adjustment that they have to make, and they've got to make their own choice. Do they want to come to the office, or is working remotely really important for them? The good news is, the economy's still really strong. The job market is strong, and people who work at Uber, they have lots of opportunities everywhere. We want them obviously to take the opportunity with us, to take the opportunity to learn. But this is a company where you have to work hard. We're not going to make excuses for that, and you have to work hard together, and that's the kind of environment we're trying to build.
Okay, final news you can use. I've been talking to a lot of drivers, and I always look at my score. We've talked about the passenger score, and it seems to me that in New York, in particular, that the drivers in New York are less inclined to automatically just give over the 5 stars, and that just about everywhere else in the country, the drivers are giving the 5 stars, and so the New Yorkers have a lower rating than the rest of the country. Is such a thing true?
Andrew, do you want me to make excuses for you?
Maybe, but I've actually now been asking around about this.
I will tell you that New Yorkers are tough judges. They're tough judges when it comes to their sports teams, and they're tough judges as it relates to their passengers as well. I think it's something that's wonderful about New Yorkers. So you're going to have to up your game, Andrew. You're just going to have to be super nice.
Do the drivers in New York also have tougher ratings? Do they have lower ratings than elsewhere?
I think that passengers in New York are kinder, but we've got
drivers
who are demanding, and they should be.
So, Dara, here's what happened. I happened to be in California, took an Uber, and the driver said to me, "You must be from New York." And I said,
almost didn't pick you up.
And I said, "Well, And I said, "Why did you say that?" And he said, "Because New Yorkers always have lower ratings."
How low is your rating?
That's, by the way, drivers. These drivers are pros. They know the marketplace. They understand these things. So yes, they do know that New Yorkers have lower ratings. Or
you got to grade us on a curve, though.
I cop to the senior thing. I can't believe you're copping to this. That you got like a 1 or something. But so wait a minute. I think
I'm still high 4s.
Okay, but the vast majority of the country does think that there is a degree of rudeness among New Yorkers that people in the rest of the country do not think.
No, they're getting high scores. A New Yorker in California will get a 5 stars.
Maybe you're on your best behavior.
You're losing the rating here in the city. It's a pleasure.
So you're in the high 4s. What would you like to be?
5 or 5. You want to be like 4. You want to be like 4.95 or something.
You willing to disclose your actual?
No, I'm not.
Are you below 4.5?
No, I'm not below 4.5.
What's a bad score?
Yeah, what's a score that will make a driver not pick you up?
4.5 is bad. You don't want to.
4.5 is bad.
Yes.
You're a 4.51.
I'm better than that.
4.51 is bad.
I'm not 4. I'm much better than that.
But you're not disclosing what you are.
Well, Dara, what do you think the lowest number is? It's like acceptable.
4.5 is not acceptable.
No, I'm not 4.5.
It depends. We do grade it on a curve. So city by city.
You do?
Cities have different personalities. Yeah, of course.
Oh, really? So hold on.
We're a very local business.
So hold on. So New Yorkers' score is actually, so my number is actually higher than it should be? Is that what you're suggesting?
No. New Yorkers on average have lower scores because New Yorkers tend to be tough judges on each other. It's a good thing.
Okay.
Do you know your car service rating? Think if you had one of those.
We got to run. We got to run before this conversation really becomes a problem. Dara, it's great to see you, sir. Congratulations on the earnings.
Thank
we look
you.
forward to see you again soon.
Thanks. Take care.
Higher than that. It's still higher than that.
Up next on Squawk Pod, Lazard CEO and Obama White House Budget Director Peter Orszag on the season of trade deals, what we're spending our money on.
I think we need to be paying much more attention to our fiscal trajectory today. We're at 7% of GDP, as far as I can see.
And maybe his Uber rating too. Stay tuned. You're listening to Squawk Pod from CNBC. Here's Becky Quick.
All right, welcome back, everybody. I want to get to our next guest. Joining us right now to talk markets, tariffs, the Fed, deal making, and much more is Peter Orszag. He's the CEO of Lazard. He's also former director of the Office of Management and Budget under President Obama. And we've been discussing all these important issues just as you sat down, Peter, including your incredible rating that you've got of 4.89.
Always working on it.
Yeah. Almost 4.9, right?
Getting there,
That's pretty good.
Step by step.
And it has nothing to, now I'm finding all this out. If you
Not about tip.
It's after you tip. I
didn't know that, but I guess
So you've been
I've
really big
wasted.
tipper.
Well, now you know. You can. Yeah, exactly.
The tipping part is
I want
not
that
the
money
issue.
back. Dad. We have to. I'll call up Uber.
Peter, let's talk about I guess maybe the most pressing situation today, and that would be where things stand with the trade tariffs, this meeting that is set up with China in Switzerland over the weekend. How are you reading it?
Look, we have I think the pause was beneficial for a variety of reasons.
90-day pause.
The 90-day pause, but the administration, we really need to get to yes with, someone. I think the meeting with the Chinese is encouraging because that situation is not sustainable, but it's not just with China. We need to get to yes with the EU. This really comes down to, we talk about 70, 80, 90, 100 countries. It really comes down to maybe a dozen. It's the EU, it's the UK, it's Canada, Mexico, Japan, India, China, and a few others.
South Korea, maybe.
The Falkland Islands we could kind of survive if we don't have a trade agreement with. But we need to get to framework agreements with the most important trading partners in this 90-day window.
We're not going to get that with China.
But let's talk about China. My expectation is we're going to get to a average tariff rate of somewhere between 30 and 50%, either because there is a Xi-Trump summit ultimately and there's a deal. I think that's less likely, or because we just wind up exempting more classes of goods from the tariff rates, so that you wind up with somewhere between 30 and 50 on a weighted average basis. We've obviously already done that with electronics, and we may need to do that with other categories also.
That's pretty interesting because that creates these clear winners and losers, and maybe disincentivizes
and also,
the idea of trying to bring manufacturing back here.
Yeah, well, and also very strong incentives for transshipment, which we are already seeing. So when you have wildly varying tariff rates, there is an incentive to ship through Malaysia or through other countries that may have a lower tariff rate with the United States, and administering that or monitoring that is very difficult.
What do you hear from business leaders you're talking to at this point? How
desperate
optimistic?
for clarity, desperate for some stability, because we've got strong underlying drivers both of the economy and of deal activity, and then this headwind of uncertainty as this plays out. But it varies by sector. I mean, obviously industrials, transportation, consumer products, much more affected. You know, the oil majors and the hyperscalers have a different set of dynamics.
Are you more worried about a slowdown or inflation, or equally worried from the
I think the
tariffs?
Fed's in a tough spot. What I would say is I don't think the Fed's going to be cutting rates. It obviously can cut rates for one of two reasons: either confidence that inflation is coming down, or concern about the economy.
Or both.
Yeah, but I don't think the Fed is going to be cutting rates in 2025 because of confidence that inflation is coming down.
You don't?
No. So any rate cuts will be bad news.
That's a very interesting perspective. So if markets are up right now because they think the Fed is coming to the rescue, that's a miscalculation.
Well, no, but the rescue might be that it's bad news.
Right, but it's a miscalculation.
I would not
on their
read
part.
into that anything
Yeah.
positive. That would suggest
Yeah.
the Fed is concerned about the state
I
of
mean,
the
in a
economy.
perfect world,
Does that mean-
wouldn't you want rates as low as you could get them if there was no inflation, just to spur activity and just, mortgages and
Sure, yes, but
and it even helps inflation when rates are down.
I don't agree with that part. But
You know what I mean, though. If you're paying less on your mortgage.
Turkey
you're paying
tried that,
less.
by the way.
Right,
It
but if
didn't work out.
I understand that it spurs economic activity, which
Yes.
in the long run could bring more inflation. But if you're paying less on a floating rate mortgage, and if you're
yeah, look, I think everyone would be in favor of lower rates to the extent that they are
Zero would be nice.
consistent with stable inflation. And there are signs that inflationary expectations are
Oil.
ticking up a little bit.
What about oil?
Oil helps. Lower price of oil helps on headline inflation, obviously.
Can I just ask you about the regulatory environment?
Sure.
Because part of the whole argument about our economy taking off was going to be that the regulatory environment sort of just opened up in this big way.
Yep.
You work with companies
Yep.
that consider all sorts of transactions that would otherwise be regulated or at least need a regulatory approval. Has your has there been a shift in terms of how you think about that, or no?
Well, we were always a little bit more measured in terms of there would be a move away from the big is bad kind of perspective. I think that is happening, but it was never going to be, anything goes. The biggest change, in my opinion, will still be with regard to vertical deals as opposed to horizontal deals. There was always antitrust enforcement against horizontal deals. The biggest shift under the Biden administration was the way that they handled vertical deals. And I think in general, those will be, you'll go back to a more traditional perspective there, with the exception of in the tech world where the dynamic.
Okay, now I got a more complicated question for you. If you are a client that's going to go up against the government potentially, do you use one of the law firms that did a deal with the administration, or do you not? And when the client calls you and says, you have a choice. You can use Paul Weiss, or you can use Skadden, or you can go use, they made deals with Trump, or you can go use Wilmer Hale, which is effectively fighting the administration and so far winning. You choose, you tell them what?
The choice of advisor, the choice of a law firm often is a little bit less about the institution. It's more about the specific person. So there's not one answer to that question, because it depends on who the person is at the various law firms that you're considering, and whether your trust in that person outweighs the kind of macro background on this firm or that firm. I don't think there's one answer.
Peter, did you see the OMB director on yesterday? Did you get to see that interview?
I did not.
It's a skinny budget. Do you know what's in it? What did you think of the priorities? I think defense goes up 13%. I think air traffic controllers, believe it or not, they're going to spend some more money on that. Seems like a good idea at this point. But a lot of other things there's going to be some cutting.
Look, my biggest concern is the focus on non-defense discretionary, which is really where all those cuts are. There's a lot in there that actually does help spur economic activity. So slashing the budget for the National Institutes of Health, for example, when we want to be a world leader in research and spur activity in the biotech sector,
Right.
doesn't strike me as, that's not what I would do.
Is there movement afoot? I've been a little surprised that we haven't heard from more CEOs, business leaders, others about those very concerns. If you talk to universities, they will tell you that. If you talk to research institutions, they will tell you that. Is that because there's not as much concern in the industry, or because people in the industry are keeping their heads down because they don't want to be the next target?
Well, there's also a president's budget doesn't always get fully enacted, and so there's it's still early days. I would say in general, there's obviously a lot moving on the fiscal front, a big reconciliation bill, the president's budget. There are a lot of different moving pieces, and it remains to be seen. I would also highlight, and I'm saying this as someone who, even as a former budget director, got a little sick and tired of the Chicken Little and the boy who cried wolf. I think we need to be paying much more attention to our fiscal trajectory today than the concerns over the past decade. We're at 7% of GDP, as far as I can see.
Going up from there.
The debt to GDP ratio is high. We've got
spending side, 27%, 26%.
Well, spending is higher than revenue, which is what generates the.
Yeah, but it's usually 17 and 20, not 17 and 27.
But my point is, this is not a good situation, and it is encouraging that the administration is saying the right things about concern about the fiscal trajectory. But I think this is different in terms of the risk factor is much higher.
I know you have to run, but that's like taking two. You don't want to see cuts in places like the NIH. The cuts are being done too roughly, but you're very worried about the gap in our spending versus the revenue we're taking in. Like those are hard to match those things up.
Well, I have put forward in the past a whole bunch of different things on entitlements, Social Security, and Medicare.
Okay,
I also
so you're talking
think
about the stuff they're not talking about.
Yeah, well, that's where the money is.
Yeah. That's a tough question.
They keep saying that it's not us that is cutting this short. Where do you have to go so quickly? They're saying he's got to go. He's got to go.
I have to go get my Uber rating up there.
No, but they're saying that they'd let you stay till 9 o'clock, but it's no. Peter has to leave.
I don't know where
you
that's
might have
coming
a client
from.
meeting.
You start work at 7:43.
I start before that. I'm up early.
We appreciate having you here.
Sleep.
Please come back.
Conscience bothering you from those Obama years, probably.
He's headed over to Paul Weiss right now.
I sleep okay.
Let's come back because I want to dig in to what you're talking about with the entitlements and what we see happening with that.
Happy
Thanks a lot,
to.
Peter.
And that is the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Get the best of our TV show right into your ears when you follow Squawk Pod wherever you like to get your podcasts. And check out our feed. If you missed any of our coverage from the weekend's Berkshire Hathaway annual shareholder meeting, we released 2 mega-long pods featuring our live guests and Warren Buffett's full Q&A with shareholders. All the content you could wish for from Omaha right in your ears. That's it. Have a great day, and we'll meet you right back here tomorrow.
We are clear. Thanks, guys.